Tariffs. Now, there's a lot of talk right now about tariffs in the United States and what that means to everybody, really. And, you know, will it affect real estate investors? That's what we're going to talk about today on the Sub2Deals Show. Hey guys, welcome to this episode of the Sub2Deals Show, where we talk about all things subject to. Occasionally, we may talk about different topics, but it's almost always something to help you with your real estate investing business. And today is an example of one of those different topics. Today, we're talking about tariffs. And listen, you guys know that I normally don't get into news cycles and politics and all those things. I don't care who you vote for. I don't care whether you're red or blue. Doesn't matter to me. As long as you're interested in real estate, hey, I want you here listening or watching. And speaking of that, if you guys are listening to our podcast right now, hey, go check us out on YouTube. Go take a look. We do videos there, video podcasts, believe it or not. If you're watching right now, we love it. We appreciate you. If you're not watching, get over there and subscribe to the channel. But today we're talking about tariffs and how it could possibly affect real estate investors. I'm going to tell you, it can affect you in some ways that you're probably not thinking about. Most of us, people out here think that tariffs only affect car companies or big manufacturers. I saw a news story yesterday from a bicycle company in Texas talking about how they've got enough supplies. Most of their stuff comes from China. So with China looking at 145% tariff markup on the stuff that they're shipping over here, unless they can get something worked out, this bicycle guy says he may be out of business in the next couple of months. And I'm sure there are a lot of other businesses, feeling it the same way. And how can that affect us as investors? Well, we're going to talk about three different ways that this might actually affect us. Well, number one, it should be kind of obvious to most people, and that's that the price of materials is probably going to go up. Okay. I heard that we get 40% of our lumber from Canada. Well, what's that going to mean if the price of lumber goes up? Man, we've already seen that stuff during COVID. Gosh, Florida experiences it every time there's a hurricane and supplies get low. What happens when supplies are low? Well, price goes up. So what happens if the cost of materials go up and you're an investor, whether that's lumber or building materials? I actually, backtracking here a little bit, I saw a post last week where someone was talking about being actually in a hardware store when one of the cashiers there, or the manager, somebody there behind the counter, was on the phone with a supplier saying that they should expect the price of water heaters to go up by 60% here over the next few weeks because of tariffs. So what does that mean to us as investors? Well, contractors, they're going to pay more for stuff. And if contractors pay more, guess who gets to pay more as well? That's right. That's you. Stuff like appliances, flooring, cabinets, everything that isn't manufactured here in the United States is going to go up in price. And what does that mean? Well, if you're doing rehabs or flips or any of that stuff, you're probably going to see an increase in what it costs to do those things. So you're going to have to do some recalculation in what it's going to take to be profitable. So, whether it's, plumbing supply, anything really that we use, we can probably expect that to go up. And a side thing that typically happens in those situations is even American-made products here will probably go up somewhat, because what do people do? If prices go up, if I can sell something for more, I'm probably not going to keep my prices at the absolute lowest. So even American-made products will probably go up to some degree because, that's what the market's paying right now. The second thing that it could do to impact us as investors, well, construction may go down. And if they stop building houses, they've told us for the past few years now that we have a housing shortage. So, and I think the reports have been for the last several months that builders have caught up and even surpassed what's needed. And that's why we've seen a reduction in some prices in some areas. We're even in Northwest Arkansas, we're starting to see price reductions, not just a slowing of the market, but some actual price reductions. And out doing our door knocking this past Thursday, we went into a couple of areas we hadn't been in for a while. And some of those areas where they were planning big new subdivisions, yeah, the lots are all cleared. You can tell some of the utilities are in, but there's no machinery out there. Nobody's doing any work, and the weather's really nice. What does that mean? Well, they're not in a big hurry to get that stuff finished right now. Okay, because the market's a little uncertain right now. We don't know what's happening. But if there's less inventory, well, prices may go up. And it may be a little bit harder to make deals, or you may have to work a little bit harder to find those deals, because we remember what happened when the inventory was really low before. You had to talk to a few more sellers to make things happen, because it was a lot easier to sell your house. Now, people in distress, and this is why I've always been such a pusher of targeting foreclosures, because a lot of times these people don't want to market their house. They have a problem, and they'll wait to the very last minute to try to solve that problem. And a lot of times that doesn't include the ability to list and sell. So some of these people will still keep their heads buried in the sand. But just in general, just general marketing, you probably won't get as many calls. Rents may go up. Now, what does that mean for you? If you're a landlord, it's great. So you can kind of look for that to possibly happen too. Well, what happens if new construction continues? Okay. Again, the prices are going to be higher. So maybe now, I remember a builder built a brand new house right next door to us a few months ago. And I asked the guy, when I was talking with the builder, I said, hey, what if I wanted you to build me a house just like the one you just built here? What would it cost? And it was shocking, really. A 3-bedroom, 2-bath, about a 1,400 square foot house, because this house was a little bit smaller. How much would that cost me? And he said, well, I could build that house for you for about $325. And I thought, gee, that was an investor that built that house. And sure enough, the for rent sign went up as soon as it was finished. But let's just say that cost increases, 20% on that. So now it's going to cost close to $400,000 to build that house. What's that going to do to housing prices? Well, if that's the cost to build one now, there's a chance that could really increase property value, because that's what it costs to build it. So what does that do? That increases the value of all the other homes. That can really affect affordability again. So you got a whole other problem with that, which brings us to the third thing, the major thing. And these are just 3 things, but there are many others, but we wanted to touch on the top 3, is that interest rates could be impacted by the tariffs. Tariffs and trade wars, they have a funny way of just really shaking up the economy. We've seen that. We saw what happened to the stock market last week. When the stock market dropped so dramatically, I think I made a few people mad. I actually did a 90-second video on that, and how to avoid losing money in the stock market by putting your money in real estate instead. A few people thought that was a little bit insensitive, but listen, it's just facts. Okay. I've never been a big stock market person, because too many people control behind the scenes what happens with those stocks. Insiders that know something's going to get sold or something's going to happen, they dump all their stock. What if I'm holding a bunch of stock in that company? It gets devalued right away. I had no way of knowing what was happening. To me, it's a lot easier to track what's happening in real estate. I understand real estate. And I'm able to see what's happening in the marketplace. And it takes a lot longer for those ups and downs to really, we don't roll into it in one day. It's usually a more gradual thing, so it's a lot easier to keep up with. But if tariffs continue to shake the market up, the Fed might respond by raising interest rates. If the prices of things are up, if inflation grows, they might start raising rates again to lower the impact of inflation. And if rates go up again, what's probably going to happen next is mortgage rates are going to go up. And that is going to create even more affordability problems for people. Now, that could result in the opposite of the less inventory deal, where it's harder to sell. There may be a lot more deals on the market because people can't sell their houses. It's just a lot of uncertainty with these tariffs. But I'll tell you this. No matter the volatility in the market, no matter what interest rates do, no matter where there's a housing shortage or whether there's too much, it doesn't matter. I've been buying and selling houses creatively for over 26 years now, if you can believe that. And I'm going to tell you, there's always going to be deals to be had if you make yourself an expert in creative finance. Now, there's a lot of different types of creative finance. We focus on subject to and seller financing. If you want to learn more about subject to and seller financing, I would like to invite you to pick up our book, The 12 House Blueprint. You can get that by going to 12houseblueprintbook.com. It lays out in detail, step by step, how we buy houses, how we sell houses, and how we create a ton of cash flow and wealth by doing it. You don't have to hustle 24/7. You don't have to buy 100 houses a year to have financial security. You can buy 12 houses a year, one a month. And I'm telling you, your grandma can do that. It's a pretty simple process. But we'll talk about how all of that works in the 12 House Blueprint book. So go check that out and listen. If you guys are listening to the podcast, again, don't forget, go to YouTube, check us out. You can do that at sub2tv.com. That's SUBTV.com. Go check us out. Go subscribe to our channel. We release a ton of new videos all the time. I think we've got over 800 videos on that channel right now. So go check it out. Learn how to buy subject to, learn how to sell seller financing, and create wealth. So, guys, we appreciate you joining us today. We'll catch you next time. Get out there, talk to sellers, and buy some houses.